Hi, I'm Phil Grandy of philsgang.com, CEO. We've been teaching retail investors just like yourself since 1998, that's right, and how to trade the market properly and understand it. Now, everyone hears the bad news of the economy. We just had a historic adjustment in jobs, over 1 million jobs, all fake. We're also finding that the only way they can keep these tech stocks going up if they keep increasing the money supply. Here, let me show you something. This is the money supply. You go all the way back to 2000, okay? We just reached a record 22 trillion. And that record, we had a consecutive 18 months of money going in to increasing the money supply. 18 months in a row, and that's what pushes the tech stocks up. Because that money supply goes to the banks. And the banks didn't give it to the CEOs. CEOs buy their own stock. If the Treasury didn't print that money and give it to the Fed, and the Fed didn't give it to the banks, and the banks didn't give it to the CEO, we'd be nowhere. Now, take a look at this here. Our dot-com bubble is nearly, look at this. There's the dot-com bubble. If you look at the light blue, remember, it collapsed right up here. Okay, remember 1998, 2001, it collapsed. Look where our AI bubble is. We're almost peaking. So what's going to push it the rest of the way? When you hear how bad the economy is, people think, well, we're just going to crash. No, we got room to go. As long as they keep increasing the money supply, they'll keep taking those same 5 tech stocks. Remember, there's 33 million businesses. And the S&P 500 only concentrates on 500 of the 33 million. That's it. So their whole concentration is on tech. So as long as the money supply keeps increasing, that's what's going to push, again, these tech stocks right up to that point where the dot-com was before it collapsed. So that's what you got to watch. You got to watch the money supply. That's everything. If you don't watch that, you got a problem. And watch the bond market. Because remember, as long as you have the bond yields, as long as the bond yields continue to fall, okay, that's great for growth stocks, tech stocks. But if you have the yields turning around and going up, that's very bad for tech stocks. So you want falling yields, increased money supply, stock buybacks. It doesn't matter how bad the economy is. We'll keep going up until that point that they don't do the money supply anymore. Once they pull that out, then get ready to sell short. And that's your only protection. And we'll show you how to do that here at philsgang.com. Both short and go long. So that's it. So money supply is what's keeping this market going. That's it. Forget the economy. It has nothing to do with the stock market right now. See you on the charts, philsgang.com. Check us out.